This meet is to address the same. The dignitaries present from LIC are Mr. Rajkumar, Managing Director, Mr. Siddhartha Mohanty, Managing Director, Mr. B.C. Patnaik, Managing Director. Would request everyone to please keep themselves on mute and mention your full name and publication details as you log in. And now I hand over to Mr. Rajkumar, Managing Director, LIC.
Good afternoon, everybody who is on call today. First of all, I apologize that we are holding this press meet at a very short notice. Friends, you can appreciate that yesterday we had our board meeting and the financials for financial year 22 were approved and then put on the site of the stock exchanges. There was some clarification which is required in respect of the data which has been interpreted. I want to clarify that the previous year's profit, which is there shown in the LODR statement, pertains to the full 1 year. But since the profit was declared in the last quarter only, hence it is appearing in the Q4 filing, but it is for the full year. So strictly speaking, Q4 for the financial year 22 and financial year 21 are not strictly comparable. So it looks like there is a 17% decline. But I will request that it should be interpreted on year-to-year basis for this year, which is a growth of 39.39%. In fact, for the June 22 also, there will be no comparable figure available for the previous year because the quarterly result for the first time we had declared as on 30th September 2021. With this brief clarification, friends, I would like to highlight the performance which LIC has in the previous year. For the year ended March 31, 2022, LIC has registered an increase of 6.1% in the net premium income, which stood at 4,27,000 crore as compared to 4,02,000 crore in the previous financial year ended March 31, 2021. The profit after tax for the full year, as I said earlier, ended March 31, 2022, is rupees 4,043 crore, which is 39.39% growth over the previous year's full year profit, which was at 2,900 crore. The earnings per share for the financial year 2122 is at 6.39 per share. The yield on investments on policyholder funds, excluding unrealized gains, was 8.55% per period ended March 31st, 2022, as against 8.69% for the year ended March 31, 2021. The net NPS for the in the policyholders fund is at 0.04% for the year ended March 31, 2022, as compared to 0.05% for the previous year ended March 31, 2021. The solvency ratio, which is a yardstick for the health of any organization, a life insurance organization, for the year ended March 31, 2002, is at 1.85 as against 1.76 for the period ended March 31, 2021. For the year ended March 31st, 2022, the persistency ratio for the 13th month, 25th month, 37th month, 49th month, and 61st month were 75.59%, 73.47%, 66.58%, 63.85%, and 61% respectively. There was some challenge to it last year, but if you look at the persistency level for the 61st month, we are probably the highest in the industry. Although there will be a challenge, it looks like that we are a little lower than the industry in the 13th month persistency. But having a higher persistency at the 61st month means the customers are sticking to us for a longer period than any other life insurance company. The board of directors have recommended a dividend of rupees 1.5 per share, which translates to a dividend payout of rupees 948 crores, which aggregates about 23.46% of the PAT. I would also like to mention here that the last year started on a very muted note due to COVID-19 pandemic. LIC was able to increase the marketing activities and ended the year with a significant growth of 18.70% in the quarter of Jan to March 2022. in individual first year premium income as compared to the corresponding quarter last year. LIC also registered a growth of 6.31% in weighted received premium for the financial year ended March 31. LIC also completed 2.17 crore of new policies during the year with a growth of 3.56% over the last year. The market share of LIC in individual policies was 74.60% for the financial year ended March 31. In the group business, the market share of LIC during year ended last year was 89.07% by number of policies, public schemes, and 76.16% by first year premium. The market share of LIC as at the end of 31st March was 63.25% in composite first year premium income. LIC maintained an agency strength of 1.33 million, a large share of whom are working in the rural areas of the country, thereby giving us a pan-India presence across the various socio-economic segments. The average productivity per agent was 16 policies in the financial year 21-22 as compared to approximately 15 policies in the financial year 2021. So further the exercise of, I would like to emphasize that determination of Indian embedded value for the corporation as at March 31, 2022 is under progress and is expected to be completed by June 30th, 2021. As soon as the exercise is completed, LIC of India shall be making required public disclosures of the same in respect of IEV, value of new business as well as margin of new business. With this, we are open to any questions from any of the participants, and thank you very much for your patience listening.
Yeah, Mr. Mayur Shetty, you can ask your question from Times of India.
Thank you, sir. This is Mayur Shetty from Times of India.
Yes, sir.
I did not quite get the reason why the results were not comparable with the previous year. Is it because they are not for the same period, or is it because of the change in accounting norms?
You see, we were not declaring quarterly profits before listing. That has started the process when we declared the IEV as on 30th September 2021. Earlier, the profits were declared at the end of the year only. So it is that is the sense that I'm saying it's not comparable, because this year Q4 is not comparable with the Q4 of last year, because last year Q4 was for the full 1 year. So it can be taken that way also.
So it's not the numbers that is there in the stock exchange. They are not 3 months versus 3 months.
Exactly, not 3 months versus 3 months, but also because the numbers were declared in the Q4. So whenever we are making a filing, it has to be shown as for the Q4 only. But it was for the full 1 year, actually.
Right. So
I will further elaborate. When we are going to declare Q1 for this year, I mean the current 23, FY 23, the profit for the last Q1 will be 0, because we have not declared it. Q1, Q2, that is the situation, sir.
It's not possible to get a work backwards and get the number.
No, sir. It will not be possible. From September this year onwards, the comparable data points will be available. September last year 21, we have declared it, and December Q3 also and Q4 also. So September 2022 onwards, it will be quarterly available.
Hello, sorry, I lost the connection.
Yes, Jain from CNBC.
Yes, Mayur, I hope what Rajkumar sir said, it was totally clarificatory in nature.
Yeah, just one more
point. Clarification in nature, right?
Yeah, just one more point I had that so you're saying that the embedded value and value of new business, all these parameters will be known only later in the.
Yes.
How will the analysts? How would the numbers be analyzed then from a shareholders' perspective?
No. Unless until I have an exact number, it is very difficult to say. So that work is in progress. My actuarial team is working, and we are putting a latest date by 30th June. And as soon as these numbers are available, we will come back and we'll talk to the analyst and the investors at large.
Right. So this is this reporting is largely for compliance purpose, not to give.
Right. Absolutely, sir.
Absolutely correct.
Absolutely correct.
Thank you.
Yash, you can ask your question, please.
Rajkumar sir, just needed a few clarifications more than asking questions. One first thing is that is the understanding correct that we would only be able to analyze, us or analysts would only be able to analyze the numbers on a comparative basis quarterly starting Q3? Is that correct?
Q2. Q2 comparable numbers will be available.
Okay.
Yeah.
Second thing that I wanted to understand, apart from the fact that those of full year numbers and quarterly numbers were not available, but since when did you start factoring in the revised profit sharing that you have for those numbers to be comparable on that basis as well?
Just last year, you see, when the LIC Act was amended and we were required to do the fund bifurcation into the participating and non-participating, and that process, the time given to us was up to 31st March 2023. So, but we internally decided that we will do it by 30th September 2021. So that becomes a data point when we bifurcated the fund, and then we had the quarterly results at that point of time. And then we had in the Q3 as on 31st December and 31st March 2022. So these are the data points which are available. But for Q1 of last year, we have not declared the profit because earlier the valuation was annual. Now
Correct.
The profitability will be determined quarter on quarter.
Correct. So from Q2 onwards, on both bases, the new profit sharing basis, also the quarterly numbers, it will be absolutely comparable.
Absolutely correct. Absolutely correct.
Okay. Second thing, any particular reason why we don't have the Indian embedded value, and hence two most important parameters, the value of new business and margin, not available, and we'll have to wait till June for them? I mean,
you see, it's a very long exercise. Let me clarify that we are implementing a new IT solution for calculation of Indian embedded value.
Okay.
And we need to cross-check all the data. Of course, as 30th September also, we cross-check that data. The outputs were checked with our existing system. It has to be consistent. Then we again check as on 31st December also, it has to be consistent with our liabilities which were thrown out by our internal software which we were using. But we also want to confirm as on 31st March also, so then we will be absolutely sure that the new system is perfect. Although the previous two data points, it was completely matching with our liabilities. So that is the reason. And then we were busy with the closing of accounts. And why actuarial team was looking at, you see, we have 285 products to be modeled into the new system. It's a Herculean task. We had completed for each and every product, we have to check the consistency of the outputs. So that is taking time. So we don't want to rush into any number which will be tomorrow can be questioned. We want to be absolutely sure. Hence, we are taking a little more time. But going forward from Q1 onwards, it will not be taking that much time. We will be doing it simultaneously along with the completion of the financial statements.
Okay, one last question, sir. Of course, Chairman, sir, with the listing of the company had guided that, LIC would reach margins of 20% faster as compared to the private companies after they got listed. Just wanted to understand what is the timeline that you're looking at? I mean, faster as in how fast would that be in terms of LIC having margins of anywhere upwards of 20%?
Yes, you see, the margins are basically driven by the product mix.
Correct.
Presently, our product mix is dominated by the participating business. Where we are today, it is because of that. Now, going further, it is not that we are going to lose focus on the participating business, but our more focus, more growth, driver of growth will be the non-participating business. Where we are very sure that the one is the annuity, the other is the ULIP, and the then guaranteed products. We have already decided that in future, we will be launching only non-par products, so that presently also we are having now 18 products on the non-par side and 16 on the par side. Now, with the product mix changing towards non-par in the future at a greater pace than on the par side, the value of new business will be created. So that is the strategy we are adopting. One of the biggest driver of growth for us will be, which we are looking at, is the bank assurance channel. Other players, like listed players, they had a head-on advantage over us because they own their own banks. So LIC has to start from a set as having no bank. Of course, IDBI tie-up has given us a leg up, but in future, now we are having 72 tie-ups with the different banks and close to 60,000 outlets are now available to us. I'm not saying that on day one, 60,000 outlets will be activated. It will take time on a gradual basis. In the next 5 years, we would like to activate each and every outlet which is available to us. Hence, we are looking at a period that, yes, in the next 5 years, we shall be having at the same BNB margin and numbers, or maybe better than what the industry average is. But we will be trying to do it a little earlier with all our efforts. That was the message Chairman Sir has given.
Okay, Ratsa. Thank you so much, and all the very best going
Joel
Thank you,
Rebello. Joel, you can ask a question, please.
Thank you, Shab. Sir, I just want to clarify the claims filed or claims paid for the quarter. I know you said that it's not comparable and all that, but the claims paid is still elevated. It's still high. I think if my memory serves me right, it's up 18% year on year. Is this still a residual impact of COVID? Why are claims paid so high still? Can you just give us some?
Yeah, sure, Joel. There are two impacts. One is the residual impact, the tail impact of the COVID, because we don't know. The claims, death claim number had gone up substantially in the last financial year. But one was the reason that we have higher payouts in death claim. The other bigger impact is that 4 of our products got matured and we had to pay the maturity claims. So 4 products getting mature and some of them very high value claims were there where the minimum sum assured was 5 lakh rupees. So that payout went out and it increased our payouts. But that impact of 4 products getting closed will not be there in the current financial year. Right. And we also believe that the COVID impact may not be as severe as was last year. God forbid, we should not face any other wave in the current financial year. So we believe that elevated level of claim payment will be as per the previous trends only in this financial year.
Sir, just want to clarify. You can give us a breakup of what is the claims due to COVID and what is the claim due to these 4 products which got matured. If you can give us some sense.
No, presently, Joel, I don't have this granular information, but we will pull it out and can share with you.
No, mota, can you say broadly half of it is because of COVID, half of it is because of these 4 products, or is 4 products only 20% or something like that? Anything you can tell us?
It is not like that because we are having 250 products in our books for which the claim can come. And the people can write COVID or COVID related. So this data is captured in our system and we need to have a program to take out that data. Any number without having a verifiable data.
Sir, I just wanted to clarify again. Chairman Sir is not there. I don't know. I missed the introduction. Is there a reason why Chairman Sir is not there today?
Chairman Sir is in US with the Government of India delegation.
Okay, sir. Thank you. And all the very best.
Yesterday night he has left.
Thank you, Joel. Surbi from Hindu Business Line, you may ask your question, please.
Hi, sir. Congratulations on the results. Just wanted to understand that, how frequently will you come out with the embedded value? Or like what will be the frequency of the exercise? And secondly, a lot of the investors don't seem very happy with the dividends. So if you could elaborate on that. Thank you.
So, Surbi, first question is regarding the Indian embedded value of the corporation. We will be going by the industry standards. Industry is declaring it half yearly and we will also follow the same system in future to align with the industry. The second question is related to the dividend payment. We have to understand that out of 4,043 crore of profit, whatever dividend we pay, the balance remains in the shareholder account only. The money is belongs to shareholder only. When we are growing, so we need capital also for growing the business. Once the business grows, we require more capital to fund it because we need to have available solvency margin also. Presently, it is mainly given by the policyholders and last year's shareholder, that is existing shareholder, government plowed back close to 5,800 crore of its share back into the shareholders fund. So once we with more business, we require capital. Once we book more business, it will lead to more profitability, which can be shared with the shareholders. So ultimately, this retention of other earnings is for the growth of the organization and ultimately for the benefit of the shareholders.
Sir, this is Sajid here from BQ Prime. Listening to you, it seems that your systems are not in place, and you hurried going into an IPO because you're not being able to provide VNB or VNB margins or embedded value for the end for the period ended when all the insurance companies are providing that at that point in time, and you're asking for time period of up to June when the Q1 results will be coming up in July.
I think this is a very wrong kind of.
No, I'm going by the assessment which you have given.
You said it is not that we rushed into it. We had 2 years of preparation for it. You see, there are many processes. Sir, let me come. It's not a simple process of declaring some number. There is a science behind it. And we are not like any other life insurer who may be having 20, 30 products. We have 285 products. And the BNB for calculation, it is policy-wise, the cash flows have to be calculated. And you also have to appreciate that we have almost 29 crore of policies in our books. So it is not a very simple task. We have bought a very robust software which has been implemented. Their outputs have to be checked. We have an existing system which was not having certain variabilities, sensitivities, which has been built into it. So we have to be very sure that whatever data is output is thrown, it is consistent. So if I rush with the information, it could be excessive or it could be, not beneficial to the shareholder. So we want to ensure that whatever information is coming, it is perfect. Second part is that we have also studied the industry. There are some industry players which are also declaring their IV and VNB with the Q1 results. It's not that we are doing something wrong, and
there are some who are doing on a quarterly basis, some who are doing on a half-yearly basis, and you have opted to do it on a half-yearly basis. So that's why I'm asking you, if the results have to be announced along with the full-year numbers, and you are coming out with a lag, the metrics which street or the analyst or we as reporters need to report on a company as big as LIC, if it comes with a lag of 3 months, this is of no use, right? Neither to the investor nor to the shareholder. So you have to have your system.
You are reading in between. I said declare. I did not say I will not calculate it on quarterly basis. I didn't say that. We are going to do it quarterly basis also, but we will be declaring on a half-yearly basis, but for the meet and discussion, this data will be available. When we are saying declaring, it is filing with the exchanges and other things. But yes, we are going to calculate it quarterly basis also, but I said for the declaring purpose, it will be half-yearly.
Is this going to be a one-off aberration, and from next quarter onwards, we'll get all the data at the time of your quarterly earnings? Is that...
Immediately after 30th June, we will be starting calculating it for Q1 also.
So will you be declaring that as well on a quarterly basis?
No, presently we have decided we will be declaring to the exchanges at half-yearly basis, but we will be open for any discussion on a quarterly basis with the analysts and others. We are open to that.
So one more clarification which you spoke about, your opening statement said that your Q4 numbers cannot be compared with the previous Q4 of the previous financial year, but you do disclose on a quarterly basis what kind of performance all insurance companies have to do that to IRDA. How difficult would it be for you to bring out a pro forma performance comparing the Q4 and last Q4, or going forward in Q1 and Q2 perform of Q1 and Q2 of last year? Because ultimately, if you do it on a quarter-to-quarter basis, you will say that that's unfair because it has a seasonality to it, and year-to-year basis, you are saying there's no comparison available. So how will you?
Sajid, I think we did not, I did clarify that was a different data point, and from September onward, the comparable figures for the last year are available. We started doing this profit declaration from September 21 onwards. Earlier, we were doing it quarterly financials, but we were not declaring the profits. So for Q1 of 21, Q2 of 21, and Q3 of 21, that data was not available. Hence, it is not comparable. That's the. But going forward, the quarterly statements, financials will be prepared, and the profits will be declared on quarterly basis. I said from September onwards, the comparable data for the profit will be available.
So how do you want us to report on you till September, from now to September?
No, sir, I cannot give I'm just giving a clarification.
If there is no comparable, how will
that is only Q1 only, sir. Only Q1. Let me, Sajiji, let me clarify. If there is going to be a zero profit for the Q1 of last year, and I'm declaring say 1,000 crores, it will be a distorted figure because there is no comparable data point. Today I am saying a 17% drop. The next time I will not ask you to report an infinity kind of profitability because comparable data point in. But from September onwards, yes, it will be. So we will work out how should it be reported. I am only saying that investors at large and public at large should understand. Yes, for the Q4 last year we did declare certain profit, but that was for full 1 year. That's the only point I'm making. I'm not questioning the figures. It's my figure. I have signed those figures.
Okay, sir.
Sajid, we'll have time for others also, please.
One more question. Just final question. That
you can take it a little later.
Okay.
Kumud Das, you can ask your question, please. Thank you, Sajid.
Hello. Good afternoon, sir. Am I audible? Hello.
Yes, Kumudji, you are audible.
Good afternoon, sir. So I would like to know, sir, how much profit you have booked by sale of equity in the year gone by?
It is 42,000 crores, sir.
42 compared to sir previous year's figure.
Previous year was 36,000.
Okay. And how much? How you are going to bring down your cost?
Cost, sir, we are well within the prescribed cost by the regulator.
Yes,
we are regulator. The management. This cost is 15% prescribed. We are at 14.5%. And yes, there is a scope for bringing down the cost further, and that will happen through one area is that we focus more on the channels which bring less cost, particularly for say bank assurance. Other is the use of more technology. Technology should drive our businesses. We are already a big user of technology, but I believe that in future emerging technologies they can help us in bringing down our costs. So we will be working on all the parameters which can bring down the cost. But ultimately, the cost, if it is incurred for growth of the business, I think it can need to be incurred within the given percentages by the regulator.
Sir, last question. The government in the LIC Amendment Act, there is a provision of infusion of 25,000 crore of capital by the government. So, are you going to, is going to infuse, the government going to infuse the capital, or you will be generating by your own?
So, capital, I don't think there is a such provision in the LIC Act. It only said that the authorized capital will be 25,000 crore. Authorized and paid up capital presently is 6,300 crore odd. So if we don't feel that we need any capital infusion, we are able to generate internal resources enough, which we have been doing for the last many years. As you know that the capital was just 100 crore by the government of India till last year. Only last year, some capital infusion has happened and government allowed to retain their share of profits with us. And in the last 65 years, the capital has been generated internally, and we are very sure that we will be able to arrange for the capital internally for the growth of our business. But if the business grows exponentially, say 100%, 200%, probably there will be a call to have the capital infusion. But when it comes to the crux, then only we will take a call.
Thank you, sir.
Aparna here from Money Control. Aparna?
Hello.
Yes, you may go ahead.
I'm audible, right?
Yes, Aparna, you are audible.
Yeah, sir, first off, I'm sorry to belabor a point, but I just wanted to completely get this out of the way when we talk about the comparison of net profit in various periods. So I'm looking at your standalone audited results. So can I say that the best comparison, if we have to look at your performance, would be the last two columns, which talk about the net profit in year to date for current period, which ends in March. which is 4,043 versus.
Yes, I think the correct one will be year on year. I do agree with you. That is 39 point something percent.
Okay. Okay. So I have a couple of questions. One on basically whether you have been able to analyze where your business is predominantly coming from, the non-par versus.
Sorry, I didn't get your question properly. Can you repeat, please? Aparnaji?
Aparna, kindly please repeat your question.
What question? Okay. Sorry, Aparna. My colleagues have put the question before me. Yes. Aparnaji, we are presently the major share of the business is coming from the participating business, and around 3.5 or 4% is coming from the non-par side, but which is bringing up to 7%. My chief marketing officer tell, but 29% the premium. Premium is 29% last year we have received from the non-par side. So 7% in sales and 29% in premium, new business premium is coming from non-par side.
When you say sales, you mean number of policies?
Sales is number of policies.
Sales is number of policies.
Okay. So 29% as per premium, and when you say premium, you're meaning first year premium.
Yeah, we mean first year premium.
Okay, so 29% on premium wise and 7% on the number of policies. That's the share of non-par.
Yes.
Okay. Are you looking at a specific number in the share? So like maybe 40% or something? I'm just throwing figures. I mean, I would like to know from your end.
Aparnaji, it's very difficult and it's not a forward-looking statement I will be making if I give a perfect number. But as I said that we need to focus on the par business also, which is where we are today because of that. But the growth driver will be the non-par business. We see a lot of opportunity I can share, which is now the data is in public domain. That in the ULIPs, what was 152? 152% growth in first year premium we had last year in the ULIP segment, which is going to, we feel that is a great opportunity for us to increase their sales. The other is the annuities, which we believe that the share will come back. We are very dominant in the annuities. The third product which we are looking at is the term product, and the fourth is the guaranteed return products. Health insurance is another segment which we believe that post-COVID there will be a lot of sales happening in the health products as well. So as I said earlier also, that we will be focusing on the bank assurance tie-ups to drive the new business growth. We were very strongly selling non-par business in early 90s and late 90s as well. Close to 75% of our business was coming from that segment, which is not that new. Non-par business is new to us. So shifting to non-par business for a quantum growth is feasible for us, and we are looking for that in the future.
Okay, so one last question on basically you are the biggest asset manager in the country. So when we look at the yield on your investments, it has fallen. Although if we compare you with your private sector peers, you're much ahead in terms of what returns you generate.
Aparnaji, I don't know what are their figures, but let me tell you that investments are governed by the IRD regulations, then Insurance Act and LIC Act itself. 50% of the investable funds have to be compulsorily invested with either GSEC, government securities, or SDLs by all insurers. While investing the money which belongs to policyholder, the main concern for any life insurance company is the protection of the invested money rather than the return. 8.55% return in a depressed market is a very good return. We do invest in the corporate bonds also, which gives us a little higher yield than the GSEC as well as SDLs. At the same time, we are also very aggressively in the equity markets also. Out of my total AUM, which we are managing close to 42 trillion of rupees, 25% is in the equity market. So we do book profit, but I cannot book profit in one single year, whatever is the MTM gains in the equity market, because I have to book profit over a period of time, because I want to give that benefit in terms of in participating policies to the policy holders as bonus. So the unwinding happens, as my actuarial team termed that, over a period of 10 to 15 years. So although my market gains will be close to 5 trillion, but I will not be booking all the profits in one single year.
Understood.
We have last 5 to 7 minutes more. Swaraj, you can ask your question, please.
Thanks, Shab. Am I audible?
Yes, Swaraj, you are audible.
Thank you, sir. So I wanted to ask, in the prospectus, there was, you had declared that there are some mark-to-market losses on certain investments, some illiquid securities, which is around 6,000 odd crores, which has not yet been accounted in the income statement. And you have some time from IRDA till January 31st. To, take that into. So will you be able to do that in that time period? And how does that, then affect your profit for FY23?
So Raji, these investments are pertaining to our pension and group schemes. There are a separate regulatory provision for that, and it says that in case of downgrades, the investments have to be disposed of within 90 days. Otherwise, the shareholder has to fund it. Now, many of these investments are standard in our books, so we have taken that issue with the regulator, and that's why the regulator has permitted us that it can be done by 31st March 2023. That dispensation is available to us. But we are in the process of disposing of these investments. We have already made substantial progress in that, and but still 5,000-6,000 crore remains. And we are very hopeful that we will be able to dispose of them. Some of the investments have become other investments because of the COVID impact also, when the companies were not able to declare profits or the ratings were downgraded. We expect because of the upgradation of the ratings, that's the number one. And if that is not happening, we are looking at the opportunities to go to the market and sell them. And all these things will be employed. Regulator, the industry as a whole has approached the regulator also to revisit many of the regulations, and the regulator is also looking at whether there is a need for changing the various regulations, including investment regulation. So we are looking at all the opportunities, and we are very sure that we will be able to set the things right by the time the regulator has given us the dispensation.
Okay. So last question from my side. What is the size of this separate COVID reserve that we have created?
Should we? 7,500 crore is the reserve for COVID. Let me also explain here that we had, as a prudence, provided this reserve. We believe that the worst phase of COVID is over, but the tail is still there unless until it totally diminishes. There could be claims. But in the Q4, we have seen that it is tapering off. But as a prudent risk management practice, we have provided this reserve. And in future, if we see that this impact has totally vanished, these